Okay, so it's tax plan time for Donald Trump. He had his third major, embarrassing, shameful, disgraceful, pathetic, humiliating, mortifying public failure to repeal and replace the Affordable Care Act. And now Donald Trump wants to move on to his tax plan. And months ago, I mentioned to you, who's talking about the tax plan? It's as dead in the water as the wall that Mexico is going to pay for. It's scandal after scandal. No tax plan for a while. And now Trump is deciding to try taxes. He announced this in front of what was a relatively small crowd at the Indiana State Fairground, a great place to announce new legislation. The biggest crowd, by the way, for any tax plan announcements by a president of the United States in 2017. That's true. That was actually the biggest crowd for that. Anyway, let's analyze what's in the tax plan, right? I really want to get into the meat of it, or the tofu of it, if you're of the vegan persuasion, but we're going to dig into the substance, is what I mean. Trump hasn't actually explained how much the plan would cost. It's probable that Trump doesn't know how much the plan would cost. It's also probable that Trump doesn't know how it would benefit working people, because it really wouldn't, but that's okay. We're going to figure those things out, okay? The proposal is 9 pages long, and it has a number of specific provisions, which I'm going to be analyzing with you today. Let's start with the first, which is number one. Donald Trump's tax proposal would simplify the number of tax brackets. It would create just 3 tax brackets at the federal level: a 12% tax bracket, a 25% tax bracket, and a 35% tax bracket. Right now, the lowest bracket is 10%, and the highest bracket is 39.6%. So in terms of dollars, this is going to save a ton of money for the very rich. How can Republicans sell it? Well, they'll say, hey, it's going to help a lot of people who might be in the 15% tax bracket. It'll drop them to 12. So they will sell it as this is reducing the tax bracket for a lot of people, even though, of course, in terms of actual dollars, it's going to disproportionately help the very rich. We won't know exactly what the numbers are until we know the income limits for each of those brackets, and I've not seen that yet, okay? That's provision number one. Number two from Donald Trump's tax proposal: it is going to give Congress the option of a higher fourth bracket if Congress wants to pass that. A Republican House and Senate are going to say, here are the 3 tax brackets created by the Republican president, which are really, really good for rich people. But what the hell, just for fairness, let's add a 4th higher tax bracket. No way, that is there for optics. Number 3, and now we're really getting into the meat of this. Donald Trump's tax proposal will double the standard deduction from $6,350 to $12,000 for an individual, and from $12,700 to $24,000 for married couples. Stay with me here, okay? In order to understand what the effect is of doubling the standard deduction, you need to understand what a standard deduction is. And in order to understand the standard deduction, you need to know what deductions are, right? So very quick sort of tax crash course. You pay taxes on your taxable income. Now, you might earn $50,000 in a year, but you only actually pay taxes on the portion of that $50,000 that is taxable. Deductions take away from taxable income. So, for example, mortgage interest is a deduction that has existed up until now. And depending on your income limits and other stipulations, you can deduct mortgage interest. So imagine that person who earns $50,000. Let's imagine they paid $5,000 in a year in mortgage interest. That means they pay taxes as if they had earned just $45,000. And there's 2 ways to do deductions. You can itemize your deductions, meaning you go through $5,000 for mortgage interest and you add them all up. Or you can do what's called take a standard deduction. Right now, the standard deduction is $6,350 for single people. That means that regardless of how much you have by adding up your deductible expenses, you can take the $6,350 deduction if it benefits you. You can decide, I want to itemize, or I take the standard deduction, which you're entitled to no matter what. It seems like if you double the standard deduction, that's for the people, right? I mean, you get to deduct as a single person an additional $6,000. But the issue is that there is some really important fine print to Donald Trump's bill in doubling, or proposal, in doubling the standard deduction, where it says To simplify the tax rules, the additional standard deduction and the personal exemptions for taxpayer and spouse are consolidated into this larger standard deduction. Whoa, whoa, whoa. What does that line mean? Personal exemptions? What is that? So the way it works now is, in addition to the standard deduction I told you about, a single person who doesn't have dependents can take, for example, a personal exemption of $4,050. If you're over 65, you can also take a $1,250 additional deduction. That means that the real standard deduction is not really going from $6,350 to $12,000. If you're, for example, 65 years old, you're only getting a $350 increase in that deduction. But if you're low income, your tax rate might go up from 10% to 12%. So it's actually possible that as a 65-year-old who currently pays 10% on their income, you might get a few more dollars in deductions, but end up paying a higher tax rate. You could end up paying more tax under Donald Trump's plan because of the combination of the tax brackets and the deductions and the elimination of those exemptions. You've got to look at the details. Okay, number 4 from Donald Trump's tax proposal. It would increase the child tax credit from $1,000 to an unspecified amount. Until we know that amount, it's not really worth going too deeply into that, but we'll follow up once we have more information about it. Number 5 from Donald Trump's tax proposal, it would also create a new $500 tax credit for non-child dependents. Like, for example, if you have elderly parents living with adult children. That one's pretty straightforward. Number 6, Donald Trump's proposal would eliminate the alternative minimum tax. Major red flag. Now, Donald Trump is claiming that he wouldn't benefit personally from this tax proposal. What is the alternative minimum tax? The alternative minimum tax is a supplemental income tax in addition to baseline income tax for certain individuals, corporations, estates, and trusts that have exemptions or special circumstances allowing for lower payments of standard income tax. In layman's terms, the AMT makes sure that no matter how many deductions you take, if you are really, really rich, you're going to pay at least some minimum amount of tax. And the idea is you want to prevent people who are incredibly wealthy, but through very expensive accounting and tax attorney advice, have figured out a way to structure their income so that it is very minimally taxable. And AMT says, listen, if you make some certain amount, you can take all the deductions you want, but you're going to have to pay some minimum level of tax. Remember when Rachel Maddow did big Trump's tax reveal, right? The big tax reveal on MSNBC. I didn't think it was really a big reveal. But what she did show when she showed the first pages of Donald Trump's 2005 tax return was that a huge portion of the tax that Donald Trump did pay was because of the alternative minimum tax. Donald Trump and people who are as rich as him will save a lot of money because of the elimination of the alternative minimum tax. This is great for the rich, okay? And continuing with that, number 7 on Donald Trump's tax proposal, he wants to eliminate the estate tax. Now, this is super simple, right? You get rid of the estate tax, that is a boon for the ultra, ultra wealthy. And here's what people don't know. There's already a huge exemption for estate and gift taxes. Right now, you can gift or leave up to $5.49 million per person to others. As an individual, you have an exemption for the first $5.5 million you leave to someone else. Do you understand what this means? Repealing the estate tax helps you only if you have more than $5.5 million to leave to someone, which most people do not. Most people do not have close to $5.5 million to leave to people when they die. This is a provision in Donald Trump's supposed populist tax plan that only helps people with a net worth of $5.49 million or more. You might say, well, how many people are helped by this? According to the Nonpartisan Tax Policy Center, there are 5,500 estates out of nearly 3 million who would have to pay any taxes in 2017. About half of estates subject to the estate tax would pay an average tax of just 9%, because for married couples, the 5.5 million doubles. and becomes an $11 million exemption. There are 80 taxable estates that would be farms and small businesses. Otherwise, it is really rich people who would pay less. Are you feeling bamboozled, middle class Trumpists? Because you should be. Let's go through some of the last provisions here. Number 8 on Donald Trump's proposal, reduce the corporate tax rate from 35 to 20% and create a new rate of 25% for pass-through business income. Now, first, the premise from the right is highest business tax rate in the world in the United States. Trump says it, Republicans say it. We've got the highest taxed businesses in the world in the United States. It's not true even looking at the 35% tax rate, but remember, as I told you earlier, the rate is not the only thing that's important. Deductions matter because they reduce your actual tax paid, and American businesses have endless deductions and loopholes available to them. So, number one, it's a lie that American businesses are so highly taxed. And number two, and this is where it really gets interesting, the 25% rate on pass-through income. That would help me hugely, right? I'm a business owner of the David Pakman Show. I make a significant portion of what I make from the show through business distributions, which under Trump become taxed at 25% instead of one's personal federal tax rate. So the right pitches this as really good for the little guy because all these different businesses now are going to be able to pay only 25% on their tax rate. Well, hold on a second. About 95% of businesses in the United States are pass-throughs, and they do generate a majority of the government's tax revenue. But it's the really big ones that generate an overwhelming proportion of that revenue, right? This is all great, but in terms of dollars, if you have a personal tax rate of, say, 28%, and you can instead have a pass-through rate of 25%, if your business makes $100,000 a year, you save a little bit of money, not very much. If you make $1 million per year, if you can shift everything above $91,000, which is where the 25% tax rate ends, you save $100,000 on taxes with this provision. And if you make $100 million per year, this change to pass through income taxed at 25% could save you nearly $15 million per year. That is not economically stimulative money because if you're already earning that much, you don't need that extra money. You're probably going to put it in banks rather than spending it in the local community. So again, this is a huge upward redistribution of wealth. Now, one other real quick thing. One of the most noticeable deductions that Donald Trump's proposal removes is the deduction for state and local tax. This is really good for red states and really bad for blue states. Blue states pay more taxes in general, and they have more social programs. If you eliminate the ability to deduct state and local taxes, those who pay more are much more significantly hurt by that. So not only is Donald Trump's tax proposal one that is going to shift the tax burden away from the very rich, it's also going to shift the tax burden in significant ways to those in blue states. And I'm hoping that Republicans in blue states will say, no, you're not doing this. There might be stuff in here I like, but you're not going to shift the burden onto the blue states, including all the Republicans in the blue states. There is no indication at all that this tax plan is going to be good for the average person. It's going to be great for the very rich in major, major ways. Millions and tens of millions of dollars per year are going to be going to the very rich. And again, Trumpists tricked. No successes so far. If Trump gets this done, he can check off the box for my tax plan, but it will be good for very different people than the ones that were showing up at Trump's rallies saying he is for the average person. And it's absolutely pathetic that serious analyses of this tax bill basically missed by the people who most need to hear them. Send me your thoughts. I'm on Twitter at @DPakman. The show is on Twitter at David Pakman Show. The video you just finished watching was made possible by you through the membership program. You can sign up for membership at davidpakman.com/membership. We are viewer-supported independent media. You can use the coupon code IVoted17 for a 40% discount off of your membership.